Welcome everyone to today's webinar, Out of Network, Frequently Asked Questions, Part 2. I'm Anuja Vaidya with Becker's ASC Review. Today's webinar is scheduled for 35 minutes. You can submit any questions you have throughout the webinar by typing them into your control panel in the space labeled Enter a Question for Staff and clicking Send. Questions may be addressed following today's webinar, and we are looking forward to them. Additionally, in about a week following the webinar, we will be sending you a copy of the presentation to the email you used to register. At this time, it is my pleasure to start today's webinar by introducing our presenters. During her tenure at CollectRx, since joining in 2010, Richa Singh has served in a variety of positions at CollectRx. Currently, Ms. Singh serves as CollectRx's Executive Vice President. Ms. Singh's responsibilities include developing and implementing corporate-wide sales and marketing, reporting, and systems, overseeing the sales, marketing, and account management staff and functions, and serving as the lead relationship manager with the firm's largest clients. During her tenure at CollectRx, she has been instrumental in the firm growing its client base to more than 1,300 providers nationwide. John Bartis serves as CollectRx's CEO. Mr. Bartis is a veteran in the field of healthcare and information technology. As president of Dr. First Inc. and executive vice president of Prematics Inc., Mr. Bartis has specialized in providing cost containment services to health insurers and various products and services to hospitals, health systems, and other healthcare providers. Previously, Mr. Bartis was an attorney at Kirkpatrick and Lockhart LLP, now K&L Gates, where his practice focused on litigation. Mr. Bartis's clients have included a wide range of for-profit and not-for-profit health insurers, including Blue Cross Blue Shield of Florida, Humana, Capital Blue Cross, Kaiser Permanente of the Mid-Atlantic region, CareFirst, and Blue Cross Blue Shield of Massachusetts. Mr. Bartis has also worked on behalf of numerous hospitals and health systems, including Henry Ford Health System and MedStar Health, along with hundreds of physician practices. John, I'll now turn the floor over to you.
Thank you, Anuja. Thank you for the very nice introduction. Hello, everyone. My name is John Bartis, and I am CEO of CollectRx.
And I'm Richa Singh, Executive Vice President of CollectRx, and we're happy to be here today to present the second part of Frequently Asked Questions in Out of Network. And many of the questions that we're going to present today come from audience members from the numerous webinars and talks that we've presented over the years. Some of these questions, they're basic, but some are intricate as well, and we've organized them into different sections for the different topics that people have asked us questions about. So first off, we'll start today with John giving a brief background on CollectRx and our out-of-network expertise. That way you'll have a better understanding of why we're in a position to discuss out-of-network. Then we'll ask and answer some frequently asked questions regarding the following topics. We'll start with general out-of-network issues. We'll go into some different insurance policies, talk about negotiating settlement offers, discuss web portals for negotiations, also talk about appealing underpayments, and then finally, third-party rental network agreements. So our goal today, when we're done, is to answer the most commonly asked questions and familiarize you with some of the intricacies that are required to successfully run an out-of-network operation. John?
So before we dive into these topics, let me provide sort of a quick summary of our experience and expertise in out-of-network reimbursements, so you understand why we're in a position to address these issues. Now, to be clear, despite our name, we are not a collections agency and we have nothing to do with the pharmaceutical industry. Simply put, what we do here at CollectRx is we help providers get higher reimbursements on out-of-network bills. And we do this not as consultants, but as experts in negotiating higher reimbursement rates on out-of-network bills. We are the only company in the country that is focused on helping providers get higher reimbursements on out-of-network bills. And we've been doing this for more than 10 years now. We have 800 plus customers nationwide, and we process more than $1 billion in out-of-network bills each year. We work with a variety of providers, including surgery centers, physician practices, hospitals, behavioral health facilities, and labs, sort of if you do it, we do it. And there are two keys to our success. One is what we call CRICSIS, which stands for CollectRx Information System. This is a proprietary data and analytics tool that we've developed internally to support us as we go toe-to-toe with the payers. Provides us with information such as tracking the trends and tendencies of the folks on the insurance company side, to providing comparable data, to policy level data, very important to the success that we bring to our customers. The second key to our success is our people. We put together a team of people who used to work for the insurance companies and their vendors, specializing in out-of-network bills. So that expertise, combined with our data and analytics, puts us in a position to win the battle, so to speak, on behalf of our customers. Richa?
All right, thanks, John. So in this next section here, some of the questions that are asked today may have words or concepts that are unfamiliar to everyone, or you just might have a different terminology for the same exact idea. So before we dive into these questions, I'd like to provide some definitions of some of the concepts that are used today. And to start with, on this next slide, you'll see out-of-network. So this may sound like a basic term, but providers that take a mostly in-network position, they might not be completely aware of what it encompasses. So a provider that is out-of-network with a payer has not negotiated a contracted rate for reimbursement. So when a patient with insurance is treated in that center, the bill the provider sends to the payer is an out-of-network bill. The next concept here is payer, and we're going to be using this term throughout the presentation to refer to insurance companies. Next, we have allowable. It's the amount determined by the payer that should be reimbursed for a given bill. And then finally on this page, we have repricing, and that is when a payer reimburses a provider at an amount that's different than the provider's full bill charges, but it's usually at a much lower amount.
Okay, a few more definitions here. Vendors, these are third parties that the payers use to reduce payments to providers through what are known as bill minimization tactics. Payers outsource these functions to vendors who either negotiate high discounts from providers or reprice their claims into very low amounts. The next term is single case rate agreements, which are referred to by a number of different terms. You may have heard the term settlement offer, proposal, letters of agreement, LOAs. And the way this works is a payer reaches out to negotiate a settlement after services are provided, after the patient leaves the facility, but before the payer makes a payment. In return, the provider may not bill the patient for the discounted amount that they signed with the vendor in the single case rate agreement. The next term that you see here is discounts. This is the amount off the bill charges that the provider and payer agree upon in the single case rate agreement. And finally, that brings us to limited benefit policies. These are policies that put restrictions on the calculation of reimbursement. Frequently, these policies tie benefits to a percentage of Medicare, maybe 100% of Medicare, 150% of Medicare, or somewhere in between. A couple examples of these types of policies would be the United Healthcare MNRP policy or the Cigna MRC policy.
All right. So now let's get into these frequently asked questions, and we're going to start off with the general out-of-network questions. And our first question here is, how is an out-of-network bill processed? So this question, it was actually asked by an in-network provider, and it's also a great way to set the stage today. So first off, what happens is you provide service to a patient who's out-of-network, and you generate a bill that's sent to the payer, who then in turn, they send it to one of their vendors that handles these out-of-network bills. So the vendors, they look at their own databases, and they determine based on a number of factors, like the size of the bill, the type of service, past experience, and most importantly is employer preference. This is how they decide which of two strategies would yield the lowest possible payment to the provider. So one strategy is for the payer or the vendor to reach out to you prior to payment to negotiate a settlement on your bill charge. Now, the other strategy is for the payer to reprice the bill down to whatever they consider to be usual and customary, or they might even deny the bill. All right, the next question is, out-of-network in my state has gotten more challenging. So this is more of a statement than a question, but we hear this all the time. There's a common misconception out there of out-of-network. Its reimbursement rates are not determined at a state level, but it's at the employer group level. So the more the employer group pays for benefits, the higher your reimbursement. So in these instances, you'll see language like usual or reasonable and customary. These types of policies, they have a better chance to negotiate for higher reimbursement. Now, on the flip side, the lower that the employer group pays for benefits, the lower and more restrictive are your reimbursements. So in these cases, negotiating higher amounts can become a little bit more difficult. But if you have the right data, resources, and expertise, you can definitely increase reimbursements in any state. I mean, we do it ourselves for over 800 customers nationwide. The next question coming up is there a data source providers can use that is not biased as to who collected the data? So the closest thing here is Fair Health, and this was created by payers in a response to a lawsuit that involved payers incorrectly using usual and customary data. Previously, pricing was based off Medicare, and then in some instances, Fair Health took the place of it. Now, while Fair Health is a nonprofit organization, it's the payers that contribute the data, and it's the payers that are consumers of the data. So the best tip here is to track your own data. Now, I know this means that it's going to be more work and it's more time consuming, but this way you can prove that the payer's payments are inadequate based off your own information. Of course, here at CollectRx, we use what John had introduced, our Crixus database, because payers are going to have a harder time refuting your own data. Now, you need to be able to argue that the payer's reimbursement level is inconsistent with your own history and preferably the history of other providers in the community. Because remember, these payers and these vendors, they're tracking everything that you do. I mean, they know it down to the names, titles, and discount levels of everyone in your business office and what they give. You can also track the different insurance policies that you encounter, so that way you'll have a better idea of how the policy should reimburse. All right, the next question here is, can I negotiate patient responsibility? So patient responsibility, it is not negotiable. It's dictated by what's agreed upon in the contract between the employer group and the insurance company or the payer. What you can control, though, is how much you're reimbursed by the payer. So by negotiating a higher allowable, you in return will receive a higher payment from that payer. All right, next question. When negotiating a settlement, how can we be sure that the payer will pay as opposed to putting the negotiated amount towards the patient responsibility? Well, when you check the patient's benefits, the payer is going to tell you exactly what the patient's responsibility is, meaning how much deductible they have left and what the coinsurance is. If what you negotiate is less than or equal to that amount, then all payments are going to go to patient responsibility. But that's why it's beneficial to go as high as possible, because any payment you negotiate that exceeds the patient responsibility will be paid to you by the insurance company or the payer. John?
So next we have a couple of questions on the different types of policies that you might encounter. First question that we receive is, sometimes we are told that the policy pays only 110% of Medicare. Can that be right? Yes, it can. This is the type of limited benefit policy that I was referring to before. For instance, Cigna has its MRC policy where they reimburse at 100, 150, 200% of Medicare, somewhere in between. By accepting MRC patients, you are essentially accepting Medicare rates. But the good news is you're typically able to negotiate higher and sometimes much higher rates than these Medicare rates. Now, the next question, can payers legally not have out-of-network benefits in their policies? Generally, yes, they can, but there are some state and federal regulations that can mandate some level of out-of-network provider reimbursement. for example, if it's a workers' comp claim or an emergency claim. There are two primary motives as to why the insurance company would want to exclude out-of-network benefits. One is to keep premiums lower. This plays into what the employer might be looking for from a cost perspective. A policy with no out-of-network benefits yields a cheaper premium. Second, no out-of-network benefits provides the strongest incentive to employees to see only in-network providers. But fortunately, the vast majority of employers and employees do want out-of-network benefits. They want access to their providers. They want the doctor they want the hospital they want. Basically, they want to control their care. Next question is with respect to Blue Cross Blue Shield. How do I know if BCBS will pay per the home plan or per the local plan? So when you're out of network with Blue Cross Blue Shield, you can't assume that the plan will pay per your home or local plan. The Blue Card network applies only if you're contracted. Like many other policies, it's completely up to the employer group's decision as to whether we'll pay at per the home or per the local plan. Richa?
All right, thanks, John. Let's move to the next section now, and we're going to answer questions regarding negotiating settlement offers. And the first question in this section is, can I negotiate a bill right after it has been submitted? And unfortunately not, you can't. When a payer receives an out-of-network bill, they're the ones who make the decision whether to negotiate the bill prior to payment or to simply underpay a provider. And that decision, I mentioned this earlier, is based on a variety of factors. We talked about the size of the bill, the type of service provided, and again, what's most important is the preference of the employer of that patient. So once again, when a payer sells to an employer, that employer will explicitly direct the payer to pay more or less on out-of-network claims based on the employer's sensitivity to keeping its employees happy and the employer's cost to purchase that policy. But generally speaking, providers cannot influence the payer's decision as to whether to send a particular claim for negotiation or just to reprice it to a low amount. Okay, next question. I've noticed at times that when I sign single case rate agreements, they're not honored. Why is that? So there's a number of reasons, as you can see here. First off, these agreements, they're not binding. The payers are not required to follow them. There's also a number of other reasons on top of this for why it could happen. So one thing to keep in mind is that all agreements are subject to patient benefits, and they're only run through the benefits after the settlement proposal is signed. If there is any patient responsibility, meaning deductible or co-insurance, your payments by the payer will be reduced by that amount. Also, at that time, any other additional cuts like non-covered amounts or multiple procedure reductions, they may be taken due to the patient's benefits. And then finally, it's possible even that your signed agreement was never received by the payer, so the claim was not even processed correctly. But moral of the story here is this is why it's very important to check your explanation of benefits on every single negotiated settlement that you sign. Next question is, we sign single case rate agreements, but the payer still applies patient responsibility, so I end up receiving less. Is that correct? And yes, it is correct. So the negotiated amount that you sign on those agreements, that's actually the allowed amount on the claim and not the payments that you're going to receive directly from the insurance company. So all patient responsibility here, it still applies. So we'll use the example up on the screen, and let's say that you signed an offer for $10,000. Again, that's the allowable. The patient has a deductible of $3,000 left, so after applying the deductible to your signed agreement, the actual payment that you receive from the payer is $7,000 and not the $10,000 allowable that you signed on. Next question, I only receive settlement offers on some of my claims. Can I reach out to the payer after billing to ask them to negotiate? So in our experience, we have not found this to be a worthwhile strategy. Ultimately, if a claim is eligible to be negotiated, it will be sent out to do so, but there's just no way to force a payer to send a case out for negotiation. And again, this is based on the patient's plan and the employer group preference. Next question, I have 2 claims for the same patient, but I only receive a single case agreement for one of them. Why is that? So again, surprise, it depends on the patient's plan and the employer preference. Some procedures are eligible for negotiation while others are not. And additionally, the payers, their systems are designed to use the path that leads to the lowest possible payment outcome to the provider. Next question up is, why would I negotiate charges that are only a couple $100s? And of course, it's because you're going to make more money, especially if you know what you're doing. So when deductibles are met, these additional dollars, they will add up. I mean, say you have 100 low-dollar cases, and you're able to negotiate an extra $100 on each case. And that adds up to $10,000 in payments that you just would not have had before. So even if deductibles have not been met, it's still a good idea to negotiate to continue to set the precedent against these third-party payers. John?
So now let's turn to questions that we've been asked with respect to web portals and how to use the web portals with respect to out-of-network negotiations. So I'll start by sort of with the definition. What is a web portal? What it is several vendors have set up what are called web portals to automatically send single case rate agreements for negotiations. They use this tactic to save money on having to send faxes and have a person actually respond to counteroffers. Instead, the computer does it for them, making it harder to negotiate from the provider's perspective. Also, through these web portals, it's difficult to identify if the bill has any non-covered amounts or limited benefit policies, things of that nature. Avoiding the portal is the best way to maximize your reimbursement. So next question, the web portal is more convenient for me. Why would I want to get fax settlement agreements? Well, this is exactly the lure of the web portals. Their vendors are selling it in a way to make things more convenient for you, but the underlying impact is that you are not getting the highest reimbursement. Again, the web portal is an automated system set up by the vendor. To get the best results on your cases, you need to pick up the phone and speak with someone on the other end. When the web portal is involved, this is almost impossible to do. Even if you can call on your case and fax them back a counteroffer, you're most likely to receive a response back through the portal once again, and not a return phone call. Next question, we have signed with a portal which I'm sure allows us to counter their offer. Should I continue with this portal? No. You may think that you're countering with their offer, but the reality is that you're really just putting information in a comment box that has no weight. It's not a true negotiation. Again, in order to have the most effective negotiation, you need to pick up the phone, have data at your disposal, and be persistent. All the things that we always talk about that are necessary to be successful with respect to negotiating out-of-network reimbursement. And by the way, how are you going to know if this case is a limited benefit policy or has non-covered amounts? You just can't do it with the portal. So one more question here. How do I cancel the web portal? The easiest way to do it is to call the negotiation vendor and change your contact preference from email to fax. By doing this, they'll have to fax you single case rate agreements to the number you provide going forward. Reach out.
Thanks, John. All right, let's switch gears again, and now we're going to answer some questions on appealing underpayment. The first question here is, why bother appealing? Shouldn't I just bill the patient? Patient collections for a lot of providers, if not all providers, is difficult. Unfortunately, not every patient is able to fully compensate the provider. In fact, according to the May 2017 report on the economic well-being of U.S. households, which is an annual survey that's conducted by the Federal Reserve Board, they found that 44% of Americans claimed that they could not come up with $400 in an emergency without turning to credit cards, family and friends, or selling off possessions. Payers are unreasonably repricing claims to lower amounts and putting the burden of the difference on the patient. When patients are unable to pay back that balance, appealing out-of-network claims is a great alternative to collecting the money you deserve. You as a provider are able to go back to the payer, and with the proper resources, data, processes, and of course persistence, you're going to be successful in recouping the money that you're owed from them. Next question is, what should be done when the first appeal is denied? So there are many options if you have the bandwidth to handle it. First off, you want to check with the payer to see if the policy allows for any additional appeals. If so, then make sure that your next appeal is within the timely filing limits from that previous appeal. Now, only after you've exhausted all internal payer appeals should you look to escalating the appeal. So this means you can take the claim to the State Insurance Commission or the U.S. Department of Labor to fight for additional payments. Finally, another thing you can do is you can also request a peer-to-peer review if the claim is denied for medical necessity. Typically, the people that will be on that call is yourself, the provider, the patient, and then of course the payer will be part of that review. Next question here, do you recommend submitting out-of-network claims accepting assignments? And yes, we do. Obviously, the pro here is you don't have to worry about chasing the patients for your charges. Just so you know, very rarely will the payer say that, hey, you've accepted payments in full. And when they do say this, it's typically just a scare tactic. Now, the next one is, are the payers required to explain how they determined allowable charges? And yeah, payers are supposed to, but they don't. Depending on the type of claim, such as self or fully insured, the payers are required to provide specific data and allowables due to ERISA, ACA, or state mandates. But they often don't do so. I mean, have you ever tried asking a payer how they came up with the allowable? They just give you the runaround until they wear you out, basically. John?
So finally, we're going to wrap up by addressing some questions regarding third-party rental network agreements, sometimes also called silent PPOs. So what is a silent PPO or third-party rental network agreement? Well, the third-party rental network agreements, these are agreements that are signed not with an individual payer, but with a third party that contracts with a lot of payers. You can think of these third parties as middlemen of sorts. They bring together payers and providers to participate in contracts that are often not favorable from a provider perspective for a number of reasons. Moreover, they often are offered to other payers and networks that the provider doesn't even know about, the so-called silent PPOs. Now, they sound easy. With only one contract, you essentially have a contract with all the payers that are signed up with the network on the other end. Most providers, however, don't understand how detrimental they can be. As a quick aside, one of the things that we do for customers or prospective customers is a complementary analysis if you're in one of these agreements and you're considering leaving, or you're not in and you're considering going in. We can help you as you make that analysis. So the next question that we get asked are, do third-party contracts allow for patient steerage? So be clear, there is no patient steerage from these third-party agreements. In the traditional managed care contract situation, it's in contrast to this. In the managed care situation, you're essentially agreeing to a volume discount in exchange for the payer steering patients to you. In contrast, with third-party agreements, you're accepting a discount, but you're typically not seeing any additional payment. Next question we get asked, since I have a third-party agreement, do in-network benefits apply? No is the answer, which surprises many providers. Remember, the third-party agreements are not your typical managed care contract. They still allow for out-of-network benefits. Most providers, however, just assume that in-network benefit levels are being applied since they accepted a discount. The payer gets the best of both worlds, a discount on the rate and higher out-of-network benefits. something we call here at CollectRx double dipping. Next question, if our third-party rental network agreement is based on a percentage of charges, can payers still reduce your reimbursements by non-covered amounts? The answer is yes. Many third-party agreements actually have language in the contract that allows for reductions, whether it's for non-covered amounts, multiple procedure reductions, or whatever they deem to be eligible or allowed charges. Make sure you look out for that language in your contract, because this may be one of the reasons you're not receiving reimbursement at the percentage of billed charges that you thought you had negotiated. Next question we get asked about are the handbooks that the vendors produce. And let me sort of explain some of the issues related to the handbook. So oftentimes, third-party agreements explicitly incorporate the terms of the vendor's handbook into the contract. So things like multiple procedure reductions might not be addressed in the main contract, but are addressed in the handbook and you don't even know it. I've even heard of reimbursement rates being changed using the handbook. So as an example, we had a provider with a third-party agreement that was negotiated at 70% of billed charges. All of a sudden, they realized that their payments had drastically gone down, and they couldn't figure out why. What was this from? Well, their volume hadn't been reduced, and they hadn't negotiated any contracts. They didn't understand what was happening. So after months of analysis and investigation, they determined that it was actually the handbook. Their rates had been changed in that handbook for one of their most common procedures down to 120% of Medicare. No one told them about the change. So it's really a very vivid example of how you have to be careful with respect to these agreements and the handbooks being incorporated therein. What's the difference between a third-party agreement and a global agreement? Another term you may have heard. A global agreement, or what some call a continuous discount agreement, is really a cousin, if you will, of the third-party rental network agreement. First, some similarities. Both are cost containment tactics used by the vendor for the payers to lock you into reimbursement levels that are often quite low. Many times the discounts are based off of eligible charges or allowables instead of billed charges, thus lowering your reimbursement. And furthermore, you're certainly not getting any patient steerage from these agreements, and the payer, in fact, isn't even required to use them. Now, many providers don't even realize that they've entered into these types of agreements because oftentimes they were entered into by a staff member or even a temp years ago, and those personnel are no longer at the facility. And of course, because EOBs are so difficult to read and decipher, many providers don't even realize that these EOBs are even referencing these agreements. Now, a few differences. For one, third-party rental network agreements are long-form contracts where you negotiate a rate and terms with a representative from that vendor or payer. The way global agreements are entered into is that when signing a single case rate agreement on a negotiated case, there's a checkbox with language stating something to the effect of, by clicking here, I agree to accept this level of reimbursement on claims into the future. Global agreements are relatively easy to cancel with a modest notice period. Third-party rental agreements can have long notice periods to cancel. And at a minimum, again, we would encourage every provider here to look at their agreements closely and make a determination of whether to stay in them or to cancel them. So a word here about outsourcing. I know it's going to sound self-serving, but providers should consider whether they want to do this themselves or to outsource it to companies that are well equipped to handle these types of reimbursement issues. You know, the reality is that most providers don't have the time, don't have the data, don't have the expertise, don't have the resources to be successful with out-of-network reimbursements, and thus, frankly, lose money because they don't take advantage of the opportunity there. And, as you think about this, think about what the insurance companies do, right? These insurance companies are mammoth organizations. They have tremendous resources at their disposal. They have all this data at their disposal. And yet, what do they do with these cases? They outsource it to vendors. Certainly seems like it should be something that you should at least consider. One sort of minor point, but I think important point, if you do decide to outsource, really pay attention to the contract that you enter into with the vendor. We've seen situations where vendors will try to lock in customers by putting contract clauses, making it impossible for that vendor to work with a given provider. And if you think about it, if a vendor has to put up a piece of paper to prevent you from getting your maximum reimbursement, it's just something you should question in terms of how they're going about doing this. So in summary, we hope that we've answered some of your most frequently asked questions. We almost certainly will be doing an FAQs free in the next few months, so I would encourage you to send in any questions that you want to get answered. I know we're light on time here, so let me turn the floor back over to Anuja.
Thank you, John. That is all the time we have for today. I want to thank CollectRx and John and Richa for their excellent presentation and our audience for participating today. Enjoy the rest of your day, and we look forward to having you join us for future webinars.